attending today for this critical discussion on GRC in the era of AI and automation. As regulatory landscape changes, regulations evolve, technology changes, GRC professionals are faced with a number of challenges and opportunities. And many believe that AI will significantly transform their roles in GRC and their businesses in the next 5 years. So today we're going to talk about how to navigate the regulatory landscape, how to ensure how to improve the risk program with AI, how AI can streamline compliance processes, and how to ensure that from an ethical standpoint, everything is being met. So with that, I'm Mike Melton. I'm the Senior Vice President at MetricStream. I joined the company many years ago when we first got into GRC. And I'm responsible for all industries except financial services. So why don't we meet our panel, and why don't you introduce yourselves, your background, your company, and maybe while you're doing that, before we get into the details, discuss maybe the one thing that excites you most about AI.
So, yeah, sure. Mike Clover, Director of Technology and Operations at Blue Cross Blue Shield of Michigan. I've been at Blue Cross now for 12 years. Prior to that, I was at Ernst & Young doing mergers and acquisitions and enterprise system implementations. At Blue Cross, I'm responsible for all systems, processes, and data that support enterprise-wide compliance and investigations. One of those is our enterprise system, GRC solution, MetricStream. From an AI perspective, what really gets me excited is that today is the worst that AI is ever going to be.
I'm Joshua Wick. I'm the Global Head of Risk and Compliance for Hitachi Digital Services. Prior to that, I was the Global Head for HCL Technologies, and before that, I was the lead SME for PwC, leading all the regulatory risk and remediation for MRAs and MROs around the world. And what excites me most about AI is the opportunity to leverage automation with bots and technology and help reduce errors and increase auditability of organizations and giving them a chance to actually tie things back and create legal lineage.
Well, I'm Mike Reinert. There's enough mics up here, I think. And I'm the Chief Legal, Chief Compliance Officer of Mosaic Health System. Work in healthcare. I run all the risk, compliance, and legal issues that might come up in a hospital. I would say what excites me most initially is that it's going to keep me employed for a long time. I don't have to worry about being laid off by AI since I have to manage it. But what really excites me is that healthcare is evolving, the technology. I'm hoping to see it utilized in a very ethical and safe way to help reduce patient safety events and keep patients safe.
Great. So let's talk about navigating the regulatory landscape. So clearly, regulations are changing, technology is evolving fast, regulators have a tough time keeping up. How do we figure out the regulatory frameworks that deal with both the human element and their robotic overlords? Any question?
Yeah, I think the biggest thing right out of the gate when you're bringing in AI, I think you strictly have to focus on the front end, is you have to get right out of the gate corporately, you have to figure out your governance structure. That has to be first and foremost. You have to start with your governance structure. From there, when you start bringing in from a regulatory perspective, once you have the governance structure in place, and we're going to hammer on the governance structure here in a second, but once you have your governance structure in place, and you're trying to figure out regulatory change, where AI can really come into play and it gets really interesting, is you can leverage your AI to determine, one, where that regulatory change is going to be impacting your company. Two, if it actually has an implication for you as an industry, like is it actually a change that you need to make? Do you actually make that change? And three, what systems and processes and people does it actually impact? And four, it can actually go to the point of actually updating your policies and procedures for you. We're actually seeing some of that happen today.
From what I've seen in some of the use cases that we've done historically, actually AI using to provide better gap assessments of policies, the procedures, into regulatory citations to even help with creating better, defining better controls for the organization to actually reduce its risk, whether it be model risk or whether it be credit risk in a portfolio. And it also maybe like from a racial bias, there's a case study out there prior to using AI, there's 30% margin of error. Now it's been reduced down to 5. It's not the best, but it's still light years ahead of what we've done just as a manual process. And then with a little contingent oversight, working with regulatory oversight bodies in a regulatory sandbox, it's going to help us improve and get the instant feedback to help improve AI throughout our journey for our customers.
I guess for me is, with regulators, I hope none are in here, we have to educate them. We have to be ahead of the curve. Governance is going to be critical to that. Not feeling like you're on your own trying to leverage all this, because sometimes that's easy to do. But if you have the right governance and the right stakeholders involved, your job not only is to manage and help the company understand its uses, but you also have to educate regulators. Many times they're not using these things day to day in your industry, so you're going to need to help them so that they can help you down the road.
Okay. Let's shift gears and talk about risk and how we can enhance risk. So, you mentioned you're looking into this crystal ball, and it really works. How can AI help us see these disasters and avoid things in the future? Any thoughts on that? Any real world stories about AI and risk?
So when I think about AI from a perspective of risk, I'd be really focused on the use cases and what we're kind of doing today and how we're really trying to leverage some of the solutions that we are utilizing holistically. I'm hyper-focused on how we are taking our risk universe today and we're pumping it through our AI solutions that we have currently. And we're trying to evaluate against our various scenarios to try to determine which ones are more likely to occur. Either speed of onset, from a speed of onset perspective, what's going to happen in a more timely perspective, essentially. How quickly can we expect that to happen? We've got a couple, we're going through a risk assessment process right now, actually from our product perspective. So it really becomes we're taking that universe, slamming it through, and we're using our AI processes to try to determine, hey, from the top 15 risks, which one of these are actually going to occur in the next 3, 6, 9, 12 months. And then we're looking at some of those outside pressures, either within our region, within the country, from a global perspective as well, to try to determine is there anything from an outside threat actor that we need to be aware of that could actually impact just Michigan from a health perspective, or from a membership perspective, that could impact, I'm thinking of global pandemic, COVID, right? Do we see anything that could impact that as well? So those are things that I'm trying to leverage from a large language model perspective to try to understand how we're leveraging this, try to understand from a large language model perspective how we can leverage AI against our current risk numbers.
Okay. Joshua?
Well, I can talk a little bit about credit risk and understanding. Let's take credit card for one instance, right? It's the shortest life cycle. When somebody reaches out, helps you extend people to the right credit limits when they make the application based on their income and verification, if that's also for the default ratios, right? Are we overextending credit to people where we're increasing the risk of the portfolio? A great scenario is when we about 5,500 basis points for these credit card portfolios, they went up really quickly. They didn't anticipate that, right? They didn't know what the Fed was going to do, so that policy change had an impact on that portfolio. For that reason, an uptick in the defaults. The second thing I've seen is on synthetic fraud, right? Now people are using AI to actually cover the fraudulent transactions because they can take different events. Once they have those cyber breaches to take that data, they're able to actually create more adverse risk events for the banks, and they're trying to combat that with the data that we have right now.
Basically applying AI against all this data to analyze.
Right, and understanding what's your data lineage, right? It gives us an opportunity. It only works as well as you feed it. So if you're not feeding it with data, right, you don't know where that break is. So the credit risk portfolio right now, you want to tighten up your policies, not sometimes your enterprise coming through, changing your algorithms, and this can help you identify gaps by utilizing AI. And say, listen, we made a gap between 640 to 680. Now we need to change it maybe go up to 660 rather than 640 and change our credit overall, and change our risk appetite for the organization.
Well, for us, I'm thinking about two things. One, in the medical side, you're looking at human error. So AI, we like to utilize it more in, for example, radiology studies. And what's not as easy to see in the naked eye that it can catch. And what happens with physicians is if you have an unwarranted outcome or unexpected outcome, we have a peer review process where you're going back and looking at what we could have done differently, what were some of the outcomes that could have been changed, using AI to help us do that, not only on the front end, but also on the back end, and utilizing that tool to help us learn ourselves, because we are human, we're not perfect, and we're teaching these machines as well. On the other side of that is the risk of coding and billing with Medicare, Medicaid, and private payers, making sure that when we code or build something, since it's subjective to human coders, that we have a scrubber or AI technology that helps us catch anomalies, making sure that it's programmed the right way to send an appropriate bill to patients and to payers.
What about mitigation of risk?
So that's interesting. Before we get there, I want to get to one point, right? So we're not there yet with a couple things on the payer side, but what gets me really excited from a data perspective with AI is trying to determine things like the global pandemic, right? COVID is a prime example. But there are certain indicators that you could potentially start to see in claims data. People going to hospitals, right, within your area, you could potentially see a certain number of people going for whatever sickness that could be happening within your region that could be occurring. And if you can see everybody that's popping up within a certain demographic all going in with the same flu-type symptoms, then you can start going in and seeing a certain demographic, certain area, it's all spiking. You can put an AI on top of it. You can essentially start to see, all right, this is an early indicator, early trigger, early warning, and leverage the AI solution to be able to say, hey, we got a problem. This is actually now, we got to put an analytic on top of it, use large language model to kind of figure it out. That's the kind of stuff that we're not quite there yet that kind of really gets me excited. Again, similar from a financial institution perspective, again, similar from a credit score rating, things of that nature. Banking's, I think there's similar use cases and things in that realm. But again, that's the kind of stuff that I think from a large language model perspective, it can be applied all over the place. It's just figuring out how to leverage it across the various industries.
Thoughts about mitigation in AI?
Well, to me, again, it always comes down to looking at trends. When we look at risks and patient safety events, we're trending falls. So what you can do is you can identify where you'd be surprised how many times people fall down and cause injury. And I never believed that going into the healthcare business. I'm like, where are these people falling down at? I don't understand. They fall. And so it can help you identify future trends, where people are falling. Is it in the room? Is it in the hallways? Or do we have enough staffing? Do we have the right equipment? What procedures and policies are working or unintendedly not working? And so I think you can mitigate a lot of your risks where human beings are overlooking biases, and hopefully as you begin to help AI learn what you're looking for, it can catch some of those trends rather than spending all these hours poring over charts. It can kind of identify hot spots. So if it's in the parking lot and it's an icy day, we already kind of know that, but even in the summer, people are falling because there was a crack in the parking lot, and it's been taking victims every day, So we can use it to mitigate those kinds of things, I think.
I'm going to lean in with large language models around credit risk profiling and people taking applications. I think this has been a big issue for many years, whether it's been loans, credit cards, the class, and then racial disparity. This is a widely published case study. It went from 30% down to 5%. 5 is still not good enough. What that tells me is the large language models, as they're getting better, the data needs to get better. And as the data gets better, we can actually reduce the risk for the organization. And that's where it's going back to working in that regulatory sandbox. Why are we still at that 5% in an automated process, right? Where's the gap with the large language models? As they are good to right now, they could be better, right? And I think the gap is still from the financial services side. There's a lot room for improvement before we take it across the enterprise. I think we need to really drill down and take a segment of business. We're not going to create risk to the organization and create a contagion that becomes systemic for large organizations. That's why I chose Citi, Bank of America. They have these opportunities to work with regulators, create these sandboxes, look at their top key risks, what's driving, what are they hearing from their customers, and then take these and put them in a proof of concept. This can actually help us enhance and take the AI to the next level while increasing data quality.
I think it really becomes aimed on that front too, right? So as you're training your AI, you want to make sure that you have some kind of solution corporately, whatever company you're with, that you're making sure that you're protecting your sensitive data. Right? With a lot of these large language models, as you're training the AI and you're plugging it in, you're throwing it in, you won't want to be throwing over your sensitive data, your information, your corporate information into those public large language models. I think we can all appreciate that you don't want to just be throwing in your sensitive data, right? Yeah, big head nods. Yeah, big head nods.
Do you use an intermediary in that case?
Yeah, so like for what we have, we partner with a third-party firm to kind of put essentially a VPN over the open LLMs, essentially. So over to the ChatGPTs and the OpenAIs of the world, that puts a screen over our sensitive information data, so that when we are, example, trying to pair policies and procedures or large files of information, large sensitive data sets, and claims data, as an example, our data isn't going into the ChatGPTs of the world. So we partner with a third-party firm.
So is this VPN type system somehow screen out your data?
100%. Yeah, it's good.
Anything else on risk? Should we move on?
There's so much on risk. We'll move on.
That's a conversation. With 20 minutes to go.
All right, let's move on to compliance. Compliance can be very tedious. Is AI going to finally make this tedious?
I think the first line of defense is hoping so. I think the third line of defense really is. So I think it's one of those things that AI, from a compliance perspective, is one of those areas where you really have an opportunity to support your first line of defense in the monitoring of the controls that they are responsible for. When you think about, your ITGCs, the overall general controls, the metrics that they're trying to support, you can leverage your AI, you can leverage automation, you can leverage RPA to support that function. And I think that's going to be a huge support factor to providing additional assurances into the second and third lines of defense. I think that's going to be a critical aspect to be able to support overall.
So RPA, robotic process automation for highly competitive tasks, are you using some of that now?
We are using a lot of that today. We have RPA integrated not only in our enterprise GRC solution within MetricStream today, we have RPA integrated throughout our 3 lines model. We have it integrated throughout our compliance processes within our enterprise. We have a couple solutions that we use today.
I was talking to a client a few weeks back around vendor risk, and when they had some sort of red flag after doing a vendor assessment, they obviously want to assign corrective actions to individuals, but they say, can you also assign an action item to an RPA bot? So I had this vision of a robot chasing a vendor for information.
We have robots today chasing down business owners. So we have robots that are validating submissions, and then when they are incorrect, firing them back to the business to say, you did this wrong.
Yeah.
And then what will happen is that they'll resubmit, the business will resubmit, the robot will validate it again, and then when it's right and it's correct, the robot will send it back to the person in the oversight area, who will then review and validate that it's correct.
Yeah.
So we've got that personal touch, but we have a robot doing all the checks and validate.
Yeah, this client wanted to, if there's some sort of red flag, go see if the SOC 2 is done, if not, execute one automatically without human And a few other things like the gather information, maybe notify execs, super critical, right?
Yeah.
Anyway,
I'll talk a little bit about banking, but I'm not going to boil the ocean because there's so many regulations, so many overarching things, there's so many different regulators. But where I've seen the best case study so far is going to be an AML, right? KYC, collection of the 4 key critical points of data, right? That you need to actually onboard a customer. That's a very manual, time-taking task, and with bots you're able to do that. However, mapping things to correctly citation at this stage right now from different regulators, like whether it's FinCEN, FINRA, the OCC, there's still a lot of improvement inside of financial services. I've seen some case studies where it's reducing false positives from 90% down to 10 to 15%. Again, getting back to this, one of those things in financial services, the compliance is so big, it's not the interpretation. I think when we lean into AI right now, is they can gather information, horizontal scanning, but it's the interpretation of what's going to happen to each business unit, and what fine can be attributed to that breach. Like, did we capture that data? Did we send something out to the client? Do we know who they are? There's still a lot of room, I would say, from banking when it comes to fraud, credit risk. It's evolving. So I think since there's more regulations and more regulators in financial services, I think this is just the beginning of the journey, and we can learn from industries like healthcare. So what are you guys doing? We're using this VPN. It's helping us. We're screening this, but you take it line of business by line of business. For us to try to go out and put it at the enterprise and say, it's good for your capital markets, consumer loans, syndicated loans. It's just too much. You're boiling the ocean. So at this stage, the best case study I think I've seen, where to reduce a lot of back office work, I've seen it in loan applications, I've seen it as it relates to as an L1 and L2 for search.
I think on the compliance side, I think it's hard to tell where things are going to go, if it's going to help me or not. I think what's critical for us is, as I stated earlier, regulators are catching up as much as we are, if not more. They're not necessarily getting the complaints that they will get in the next few years. That's what drives a lot of enforcement. So for me, I really reinforce the idea that at least I do, I feel sometimes the weight of the world's on me as the compliance person to teach everybody how to stay compliant, but it really isn't. I think as you're rolling these things out and it becomes new, you have to have the key stakeholders, certain board members that you value, have a background in this as part of a team, a committee as we roll it out. And I think it's bullets instead of bombs, right? You're just ding, ding, ding until you get it right. Because if you get it wrong, it's the regulations that aren't even developed yet. They just go, hey, it smells wrong. Something bad's going to happen. It becomes very public. And so, especially with HIPAA and things like that, there's just all kinds of other risks with it beyond just the regulatory risks. So I think as I start to see us slowly roll this out, we are taking stair-step approaches with stakeholders and committees that report to our board so that we have a unified position on it, so that when it does come up, we have a cohesive answer to how we're going to use this, how we're going to answer regulators, and how we're going to keep it compliant.
That's interesting too, because I think what I saw initially from what I heard from a whole bunch of my friends in various companies, right? I think right when the large language models and ChatGPT stuff and everybody started hearing about it being used in college campuses and started seeing some add-ons around college campuses, right? You start to see and hear companies swing really hard in one direction, which was shut it off, shut it off, shut it off, shut it off. And then you started to hear from other companies that were like, no, I want to see what this can do. And now it's like the companies that were in the shut it off mode are trying to play catch up to those companies that left it on. And so now it's trying to figure out what's the sweet spot, because those companies that left it on and didn't build up their governance structure and didn't kind of get there trying to figure out, okay, what did I do? Where's my data? Where did it go? Did I inadvertently train these things too far? And do I have a HIPAA problem issue against privacy concerns?
I agree. We were very conservative at first. Physicians were ready to go day one. They're like, my notation's done for me, and all my notes and prescription suggestions, all this is done, boom. And I can see more patients and earn more income, but also make patients happier because I'm not making wait in the waiting room 25 minutes when you show up on time, right? And so we're trying to slow them down, but also not close it off, because we know there's benefit to it. So we took the conservative approach and let's take step by step. So we piloted lots of different things while we're looking at the landscape of the compliance and regulatory, and we're still moving forward. We aren't going to go backwards. But I thought we all thought that's why stakeholders are so important. When you have, with all the board governance changes out there, with the legal rulings on governance, you've got to have engagement, right? Because this is an enterprise issue, not just a compliance or legal issue. As we're working through that, I'm excited to see where we're going to go. We continue to pilot and open things up as we start to see it work. We learn from it, and it's not an open the floodgates and see what happens, especially with data management and protection. But you got to know where your data is. You got to know who has it, how to protect it.
Right? Switch gears and talk about ethics and bias. So obviously these tools are very powerful, they can be misused. And how do we ensure our AI doesn't inherit our bad habits and make poor decisions?
It's critical. I think honestly, it's like that. I heard one of my peers say, I'm trying to figure out how to word this because it's a touchy subject, right? One of my peers said it best to me once. We were talking about AI and we were sitting on a bar stool and having a couple pops. And he just said, he's like, I feel like when I'm talking to the AI tool, I'm talking to my 4-year-old. He's like, I'm punching in questions, and sometimes the response is incoherent, and sometimes the response is like, oh my gosh, did they just say that? It's like brilliant. It's like, I mean, kid's a genius, you know. And then other times it's airplane. It's one of those things that you gotta be conscious of and understanding of when and how you're training, what information you're looking into it. Because if you're not, what can come out of it could be awful. And we've seen it. I'm sure if you paid any attention to it, you've all seen stories, you've all read stories about what can come out of these tools. It's right, wrong, or different. And so I think how you train your solution is important. And how you put guardrails around it is important. It's just you got to be very cognizant of it, just from a biases perspective, and just be very, very, very aware.
Is there some other specific solution besides just being aware and staying positive?
Corporately, I think it's one of those that, you know, we have an idea because we can see, because of like our setup, we see what's going into it, right? Insurance. If you're just using just generic large language models, you're trusting that there's somebody monitoring it, right? I think there's that aspect to it. I think that you just have to have a governance structure around it, and you have to have a process that says we are going to do the right thing, and that we are going to be conscious that there are bad actors that are not going to be doing the right thing, and that they could be pumping a whole bunch of really awful things in there, and it's going to happen. So just be ready for it.
I'm going to lean back into the whole crawl, walk, run model, and I say this because, again, speaking from financial services, there's so many regulations. I'm just the fact that I'm keep leaning back to the regulatory sandbox idea. You know, taking a good technology, taking a concern that a bank has, and say, listen, let's take this regulation, let's say for UDAP, right, through deceptive practices. Are we going to be able to put a process in place, you know, using a bot to take this application and say, you know what, we can get it from end to end and then meet all the risk thresholds that we need, auto-approve it, and be within the guidance that we need with that regulator. I still think, you know, from my perspective, not in, you know, in healthcare at this stage, but I'm looking at the optics for that. I think leaning into where people go to get money or make a deposit, all these things, are we following a process from end to end? Because when you go to automate and put a bot, a lot of my concerns are, you've just told the regulator, you've perfected this manually. I don't think a regulator would agree most companies perfect things manually. But if you get to that point and you get to that confidence rating of a 95.5 and say, listen, we can work with this. Do me a favor. Let's set up a test case. Let's bring it to the OCC, the FDIC, FINRA, and let's do it in a 6-month trial period. Let's see how this works. And then rather than trying to do it in 1 year, as we can upskill and train, roll out a program in 1 year, maybe we extend this to 2 years, right? Just because you keep things working, and then you can have any flops. AI is still evolving, right? You don't know, and you also don't know who's always feeding your models. Because if everything's automated, right? You're teaching your kids, great, but when is it taking tests? How frequently? It can't be like every 90 days or a year. This one's going to have to be the continuous monitoring over and over and a lot of governance. And I think if you build a stronger governance model around this, but you take 1 second at a time, especially, like I said, banking, financial services, big segmentation, different product lines. Pick one product, pick the highest risk thing that you see, things that you want to automate that are going to reduce your spend and increase your compliance, right? My biggest problem with the compliance piece, when we get into this from ethics, is how it's not going to be able to interpret everything in that rule and how it's applicable to everybody's business. And that's critical. That's where you still need a human intervention and that governance structure we keep talking about here today. And I think, again, working with regulators to enhance governance programs and not making everything automated out of the gate because of odds. I think that's the challenge.
It sounds like it's basically a journey to convince yourself,
Absolutely.
regulators, that this.
It's a confidence, right? If now you're dating before you get married, right? You just don't jump in and say, hey, listen, we're going to get married next week. So it's one of those things. You got to prove it over time, and then you pick different product lines. You know, like we can talk about mortgages, CRE, you know, all the products that we sit back and look at student loans. Look at all these products, why they fail, right? And we have all this data, but now what can we do to break that down so we don't repeat these mistakes? If you work with the regulators, maybe they'll change their lending program. Maybe they'll change the policy, you know, and the compliance in that, right? And then maybe you can lend better and have less attrition as far as in your portfolio. Because, you know, like I said, mortgages were some of the worst. 2008, we sort of just put it out there, we packaged it, put it on Wall Street, and away it went. We've gotten better, but we have to perfect the model.
Well, for me, on an ethics perspective, I'm going to try to look at it from the consumer point of view rather than just the industry. You know, in healthcare, when you go to your physician, you want to hear a human being with empathy and tell you, you get to choose your medical decisions. If you have cancer and you don't want the treatment, you want somebody there to talk to about all the options. And when you get to the point down the road with AI and knowing where that boundary is, a machine can't give you that. It may not be able to answer all the questions, and it may not care about your choices. It'll say, this is the optimum treatment, do it. And, you know, some of us may have different life moral views of how we want to finish our life or make life and death decisions based on our choices in healthcare, our own healthcare. So I think from a consumer standpoint, I think you got to be careful not to get too far into the automation for efficiency, help with margins in some ways, with the balance of human respect and integrity to the consumer. So, example, this is kind of a silly example, but you know, McDonald's recently had their AI. I don't know if you've been through a McDonald's drive-through and you're just trying to order a meal and it's all AI and you're talking to the screen. I have 4 daughters and a wife. They're typically normally okay